The MACD. This is the indicator you'll see on my charts, and it's what I use the most as far as any supporting indicator when it comes to looking for divergence setups. It's called the Moving Average Convergence Divergence Indicator. It's a momentum indicator that shows the relationship between two moving averages and price. Now for the settings, I use the standard settings, which are 12, 26, 9. Some folks like to go ahead and change those and mess around with those. I don't. I just use the standard settings, 12, 26, 9. I only use the MACD for divergence and as a supporting trend indicator with other factors. For example, one of the ways that some folks will use MACD is if the MACD line is above the zero line, they'll look at that as an uptrend. If it's below the zero line, they'll look at that as a downtrend on whatever specific degree or time frame that they're using. All right, I think it applies a lot better to higher degree time frames, and I will use that as a supporting indicator at times for trend, and we'll take a look at that as we move forward. Now the MACD also has a histogram that measures the distance between the MACD line and the signal line, or the 9-day EMA. The 9-day EMA is also known as the signal line. Okay, so it's also an oscillator that fluctuates above and below the zero line, and some traders will use that to anticipate a cross. When they see some weakness in the histogram, they'll anticipate a cross. When they see strength in the histogram, they'll look for a cross. And you can also look for what we call histogram divergence. It's not something I really use, but histogram divergence can also be used to potentially anticipate a cross. The histogram is an indicator of an indicator. Okay, and for me, it's basically twice removed from price, so I don't really use it very often. A lot of times on my chart, you'll see that I've taken off the histogram altogether. Okay, so here is the MACD, and this is actually an example. This is a recent example right now, and this is a trade that I'm actually currently in right now, so I'm just using my recent charts here, so sorry about the other drawings. Okay, but here's the MACD indicator here on the bottom. The blue line is the MACD line, and this is what we look for when looking to determine if we're getting a divergence or waning momentum. But you'll see also here, during this rally in price, notice how once we started this rally, that the MACD stayed above its zero line all the way until this divergence. Then we had a bit of a pullback. Okay, it led into a correction. Then price pushed to another high. We diverged between the peaks, which was significant for what we were looking for here recently. And then even this most recent cycle diverged between its peaks. So this was a divergence here. A smaller divergence with a larger divergence behind it. That was the reason I entered into the market on the pullback here for the short. And these are more powerful. We'll talk about this a little bit later. These divergences are more powerful when you had the divergence up, the price move, and the MACD actually comes back below that zero line. Makes these even more powerful for the pullback. For in this case, a bearish divergence for a short opportunity. Okay, and of course, this is the histogram, the little pinkish lines in here. Again, this measures the distance between these two lines, the blue and the orange line here. And it's not something I really use, but some folks look at this as, if you see like the divergence right here where the histogram is starting to diverge with the indicator, looking for a potential turn coming. Okay, so it can be used to anticipate crosses. Okay, but for the most part, we're going to use the MACD to spot divergence, and then we're going to use price to confirm. So in this case, we had price moving higher and the MACD cycling lower. We had divergence led into a correction. Okay, and one more thing I should probably point out here while we're looking at the divergence is what we call neutralization. All right, neutralization is when price is just moving sideways and choppy. Okay, it's a sideways price move, and the MACD basically neutralizes back to the zero line or the water line. Here's an example right here of MACD neutralization. Okay, now look, you can see a bit of a divergence here. Price moved higher. The MACD, okay, made basically a double top right here. Okay, that is considered divergence. However, price never confirmed it, and we'll talk about this a little bit more. We need price to confirm it by taking out the low. Did not happen. Okay, price instead continued to move very sideways here, and the MACD came all the way back to the zero line. That is called neutralization. It is basically a trend continuation look. All right, so even though we diverged, we didn't get the price confirmation. Price stayed sideways, MACD neutralized back to the zero line, and price continued to the upside. The rally continued. And you see several examples of this. Okay, we rallied, price went sideways, we rallied, MACD moved back towards the zero line, price continued to rally. Another thing I want to point out here with this particular divergence, look at the price swing afterwards. See how we had this subdivided right here into 1, 2, 3, X, 1, 2, 3, 7 waves before testing that low? This isn't what we look for to trade for a reversal. Now, there was a trade in here, and it was actually right here between these swings. Okay, a smaller degree swing right here. Price came down strong and broke this level. Okay, the low point between the divergences. So we had a trade here for this decline, this pullback, then this decline. However, we don't want to trade this entire divergence because of the way price came down correctively. This was not a strong or impulsive type of a price move. We didn't have any extensions in here, so we just looked at this as a corrective move that came down to test the low between the points that diverged. That is a very common target, and we'll talk about this more later on in the examples. A very common target for divergence is the swing point between the points that diverged, or the extreme swing point, I should say. In this case, in a bearish divergence, a target for the correction would be that low. And you can see that's where the market came and tested and then continued to the upside. Right now, my target for this particular trade is actually this low right here. Okay, I'm targeting the low between these larger points that diverged. Okay, so I'm not looking at the extensions, even though that was the reason I entered the trade. I'm actually targeting a bit lower here around this 110, actually 110.70 is my target on this trade. And maybe a little bit later here in the course, when we get into the application area, I'll be able to show how this trade played out. Okay, but that's the MACD. That's how we'll use the MACD, and you'll have a lot more examples as we move forward.